The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 25th day of July. My pleasure to be here. Thank you for the great hosts. Let's try to keep that standard up. Dow's up 99 at 21,613. Just missed making by 11 or 12 points, making an all-time high. That's what we were expecting the last few days. The S&P is up 8.26. So this is very interesting because the Dow, in a sense, is leading the S&P. I prefer when the S&P 500 is leading the Dow 30. The S&P is at 2478. The composite index is down. It's down to. Let me just repeat that because I'm not sure that we've heard that for a very long time. The composite index is down. It's down 2.36 at 6,408. After a spectacular move, just straight up, a single leg A in many cases. We've got the VIX index down at 919. This is now an all-time low as far as I can. Let me just check that out. No, I will check it out a little later. I believe 931 was the low from 1994. So this really goes back. I did not see that. Let me just have a look here because one of the reasons why I was expecting this very sharp, powerful move was because because my Chapman Wave Trend Gauge gave a reading on Friday that said within 2 sessions there should be a very sharp 9 to 11 point rally in the E-minis, the S&P E-mini, that should translate to a sharp move up intraday in the cash indices. How long it lasts is a big question. There's a whole thing that goes with that. But what's really important is that the E-mini was kind of the lead figure, but really we were basing a lot of our notations and Chapman Wave formations on the 21,681 high that was made back on the 14th, I believe it was, in the Dow, and then that sharp pullback, and within the Chapman Wave concept of Chapman Wave 5 waves, what I was anticipating. Let me just do this here in the daily. It's a little easier to see that there would be a move above 21,681. The day is still young. There could still be a move. One of the reasons why we wanted to be long the Dow is because of this move to the upside, and we were fortunate enough to get that position. But what's really important about this is that the stochastic in the 120-minute chart finally turned up. The MACD is still negative, but the histogram's improving, still not giving a sign over the 0% line, a plus sign. So we've got to watch this closely. But there was a gray leg C to the upside. The moment it goes above 21,681, a lot of things kick in. So let's just get to the numbers here. So the E-mini is up 750. That did in the Chapman Wave 5. This is leg 5. Now, can it last? Can I move the 5? I haven't got a sell signal yet. I'm still in leg 5 to the upside. In leg D, that's what we were wanting to see. Very important in my work. It turns out that we're also in a 5 in the weekly chart, but the technicals are going to be very important because I have to go all the way through to Friday, not 1.25 days. I have to go 5 sessions into Friday's close before I can really get a sense of whether the MACD has finally turned positive to give even more upside. Stochastic's very strong at 90% in the weekly. The 120-minute chart, I'd say that by this afternoon, by 2 o'clock, we should be testing the 2476.25 level in the E-mini, because I show this every day, the daily, the weekly, and then I show this 120-minute chart on the right, and that's in leg C. And there should still be a D to go. Stochastic's at 87% good. The MACD is running strong, and that's also good. And it's broken to all new highs. It's got the Chapman Wave cup and ladle formation, needs to close above 2476.25 in this bar so that we can be clear that it hasn't just gone right back into filling the push to the upside, making a cup and handle. So far, it does look like a ladle, and the ladle says you should go to a D and even an E. Then you've got to be careful. So now let's get back to our nitty-gritties. Actually, if you don't mind, I forgot to put that in, so let me do that now. The Dow. The Dow has the parameters of key support is now, the Dow's at 21,625. I would have to say that 21,570 to 21,550 must be the support. There was a sharp rally this morning, and then the sudden slide. Let me explain this. The reason why I wanted to go to the Dow is to show you something fascinating. Look, my Dow Quartet, GE, horrible action. Oh, not bad today. But look at that. Just down, 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 down. In the arch formation, testing the 2516 200-period exponential moving average in the monthly chart. This is not a daily chart. This is a monthly chart. A very important period right now. IBM, horrible action. Plunges, gaps down, earnings are bad. Now it's having a good day up $1.38, but really not a good sign at all. Triple M, the third in my Dow Quartet, leads the way up, then starts to stall, has a good retracement, and then out of the blue, look at this, down 5.58%, down 11.72 right now at 198.28 after having made an all-time high, and I'm still calling it peak C in the monthly chart, but the weekly made that peak F, made me a little nervous there. That's one of the reasons why I wanted to stay negative until just 3 days ago. I said, 4 days ago, I said, no, that action is very positive. We have to be looking at the upside activity now, even if it's short term. But now you've got GE, IBM, Triple M, plunges, big gap down from the last peak D. And now we've got UTX, which is United Technology, the fourth one, down, gaps down, 253 at 120.57, down 2.10% after making a peak G, all-time high at 124.79. Finally breaks by 24 cents or something like that, 37 cents, I don't know. The all-time high of February of 2015 at 124.45. What a V-shaped recovery, and kaboom, peak E in the weekly. And that's the reason why I said to subscribers, we want to go long just for a brief period, and by midweek or later in the week, we might have to change positions. Maybe even today. I don't know. We'll see what happens. But at this particular point, I still expect that the S&P making leg D today, finally. It's got to the D. Only the Dow's now missing in this particular group. And what we're looking at is leg D at 24.79, up 9. Leg D in the weekly chart, leg D in the monthly chart, 3 Ds. What have we got here? A, B, now the 120-minute chart now. Oh, wait, there's also a D, 4 Ds. So isn't that, let's see what happened to 3D technology. Looks terrible. All right, let's go to the QQQ series. Google smacked down sharply today, and that really has impacted the Qs. Leg B, I can't really call it a gray leg B at this point. I have to say it's a B, it's a blue B. It should go to a C and a D because the MACD is strong. Stochastics at 96%. Then that daily chart is still acting beautifully. There was a left side, right side price time match. It broke above it, and I've got this now as G-Stas C in the weekly and only C in the monthly. Still very strong. We'll be back. We'll be looking at the IWM. We'll be looking at the IWM leg E in the daily. Basil Chapman, Tiger Technicians Hour. I forgot to show you the. No, I think I did that. Maybe I did. Maybe I did. Oh, I want to show the diamond formation.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White services. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I got a question about when can I recall if the chin, Basil, can you remember when your chin flashed low and worked? It's actually the other way around. This gauge is really fabulous because it's only missed a few times over at least 2.5 years, maybe 3 times. I don't know. It's flashed many, many times, but it's only missed a few times. So I just wanted to show this chart. This is the diamond chart. Now you can look it up. Diamond, they should really call it a black diamond. Oh, I have a funny story about a black diamond. Well, we won't go into that right now. This is the E-mini 10-minute chart. And there's a whole story that goes with it, and it's deadly because when it breaks down, it just plunges through the left side low bar and all that. So I said to subscribers, we had this the other day in the Dow 120-minute chart. I think right there, 1, 2, 3, 4, and right there, and I said, diamond, watch out below it, and then I said something like chuckle, but sometimes it could actually go up. And it went up. So we're looking at the same pattern. This is a 10-minute chart. Patterns are patterns. So it's a reflex action of human nature. And there it is. We're starting to break above that trend line. See if it can go a little higher than that. That'll be very interesting. Okay, so that's a 10-minute chart. Parameters to watch for. A close above 2478 would be really positive. Oh, there it goes. 2477.25. And a close below 2474 would say, be careful, we're going to retest the low of 272. So, okay, nice action, lovely action. This is kind of what we're looking at. So now I want you to just quickly talk about, and this is what I'm going to do with my my two-part webinar coming up August. So tomorrow night, Dave White's doing one of his fabulous workshops. It's a webinar that's really for subscribers of his services, etc. I'm doing one the following week for subscribers, but you can join. You can get my subscription free, and then you can join the webinar. What I'm looking at is, will sector rotation buoy the market into 2018? I have an opinion about it. I really need to see on the day before, on the last day of July, the candle from what would that be? Monday, I think. Monday is the last candle. I should check it out for July. And then we start the new month of August. And that's fantastic because it's going to give me a whole sense of what we do now for my subscribers. We're already starting to get positions in places that I think could survive some real churning of the market if that occurs, or even an 8% pullback. So I'm trying to do that. I've nibbled in some, putting tight stops, because in some cases it's really an experiment right now to see how they can hold it into circumstances. But I'm really getting a sense of what I would like to own going into August, September, October. And that's really going to be very important, because that's going to tell you a lot about the whole year. All right. So in the meantime, back at the ranch, what we want to look at is the IWM has just gone to leg E in the daily, leg F. I'm calling it an F. I could give it a recycle, but it's an F in the weekly and a D in the monthly, and it's a D spike up in the 120-minute chart. Now, what's really important about this is that the NYA.X is over 2,000 stocks approximately. Has gone to a leg F, and it could be a recycle here as well. It's everything about it is positive. The MACD is positive. Stochastics at 89%. That's good. Weekly chart has turned up. Everything there is good. So I don't want to over anticipate by saying, on the next pullback we're going to be going short. I want to have a little room to say to myself, hey, give yourself some kind of leeway, because you've got GE, IBM, MMM, and UTX saying that the Dow should not be moving up like this, 110. But it's the rotation. Remember, rotation. Sector rotation has been going on since the summer of 2010. And that's really important. So now talking about sector rotation, let me just run through these different things. Gold is right now is down 3 at 1250. Made a peak C. It's one of the deepest pullbacks we've had since it started the rally back around the 10th. And it's just had basically one little red candle, all green candles in leg C. And what's important about it is that I'm still looking at the arch formation in the weekly and the arch formation in the monthly and saying, I need evidence. I need the Dow. I'd say that if the Dow gets to the 1252, 53 level, that'll be at least the first decent sign. Well, we've got that. It's above the 200-period moving average in the daily, but I really want to see it. How does it hold? How do the technicals, which are really very good in the daily, how do they sustain any pullback? Will the 1243 level at the 9-period exponential moving average be the support you're looking for? This is very, very important. In the meantime, silver has had a single leg A, and then a pullback of 1 day, and then 1, 2, 3, 4, 5, 6, 7 or 8 bars to the upside in leg B. So it's a little ahead of the gold contract, and it's just bumped into the 9-period moving average resistance in the weekly. The two together are saying to me it's still a struggle. It's not easy, and that if I had to look at the DZZ, I often look at that. That's the inversion. It made a peak E top in the daily at about 6.28, I think it was. Let me just get there in a second. And now it's in a down mode, and it looks very much like the TLT. So it went to 629. This is the 2 times short, the gold, the double short. And what is happening is going to trough A, B. This is trough B. And the technicals are still very weak. And it's saying that there is still some internal strength in gold and internal weakness in the double short. And yet the double short weekly chart is saying, this is a very interesting moment, because if you look at the gold at GC, if you look at gold, obviously having an inversion, it held the double bottom that was made from the low that was hit at 1.201, 1201, back on the week of the 10th of March. It went down to 1204.0. So what we're looking at here is a successful test, which says you can rally to the next next moving average of resistance, or even the left side peak, but that left side peak would be all the way up at the peak of the 9th of June at 1298.8. So far, this is just in the trading range, and that's really what I've been saying. If you look at the weekly, both the TLT, that's the Lehman T-bond fund, been stuck in this trading range over the last few weeks, and we're going to be watching it very closely. Why? Because the Fed is going to make some announcement. My contention has been for a long time that at some point the Fed is going to make a mistake. They're going to get nervous, they're going to make a mistake, and that's when the market sees this 8% or more sharp pullback. But at the same time, it's also what I've been saying in terms of yields, is that if the market starts to pull back, we will know it's pulling back because the TLT, that is the Lehman 20-year T-bond fund, at 123.72 took out the 124.70 support I was looking for. If the TLT starts to rally sharply, that's going to say to us, okay, market is ready for a pullback. Dow's up 112, S&P's up 9.30, Basil Chapman, Tiger Technicians Hour. We'll be right back after these important messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone, we're back. So that's the TLT. So it's not a good candle for the weekly chart. That's suggesting, yep, the Fed really is serious about the rates. They want the rates higher. Okay, looking at copper, high-grade copper, just a terrific move. Look at this. Whoa, look at that. Even as I'm speaking, leg F, this is recycled. Ooh, spectacular move. Leg D in the weekly chart, that's a good sign. I mean, I didn't see how the Fed can't raise rates if the economy is that strong that the copper has gone up 3.42% in a day. I mean, that's one of the biggest moves that we've seen. In fact, this is the biggest move in the daily that we've seen. Look at that candle. Go back. No, you won't see. There it is. The candle of the 10th of February back in 2017, as it was making a recovery high, and then you got a doji candle the next day, and that was F, and that was the end of that. Whoa, this is F as well. We're going to be watching this very closely over the next 2 days. Never realized that. Okay, so now let's get back to our nitty-gritties. And what are the nitty-gritties? So I have, what am I missing here? Oh, crude oil, of course. Crude oil had a nice move. Look at that. Starting about to go to leg C. I never expected it to be quite so strong. I thought it could bounce, but that arch formation was quite formidable. Okay, so this will make it real simple. If crude oil is starting to rally, maybe that's the reason why the airlines are acting so terribly over the last week. Look at that. Oh, my, look at that. Just a sharp decline from the 122 area down to the 116s. That's pretty deep. And it's leg D, probably a peak D this week, and a leg D in the monthly chart. So one of the things, reason why I'm watching this so closely going into my webinar on the 2nd of August, please sign up. I think you're going to find it absolutely fascinating, hopefully very rewarding. There's just a lot that's going on here in terms of the whole rotation thing, what we could be looking at. I had a question, I had a caller who couldn't hold on, had a question, that'll be the next sector we looked at. First of all, airline index sharply down in an inverted V-shape pattern, should hold at 116.63. Watch out, under 114 is a problem, but it should hold 115s and have a bounce in the next day or so. But the IBB is the question here. IBB, deep turnaround, goes to 329, I think it was, 329.90 this morning in a cup formation, a breakout formation, E/C. MACD is good, stochastics at 90%, and then turns around and is now at 322.92. That's a 7-point reversal. That's the biggest reversal we've had since that reversal going back to somewhere in June. We had a couple of very sharp reversals. So I'm watching this closely because I've got it as a leg E in the weekly chart. So Tim, this is a tough one for me. For two reasons. Because of the rotational aspect, and it's shown us now that the fund managers want to get into the IBB as like they used to in the old days. This decline is going to be so important because on Friday, if there's no new recovery high, I would not be surprised if the weekly is suggesting that maybe we've got at least short-term top, maybe an intermediate-term top. And I would have loved to have seen 330 round number. It missed it by 10 cents. But I'm watching it. So your question would be, it's just a time to short, and all I'm going to say to you is at 322 to have a 7-point, that's 2%, 2.5%, let's say, buy stop, I'd probably say to you, try your best, have a little patience, see if you can get it a short position between 325 and 326.30. If it goes over 326, hey, it could even try for a new high. But see what's happening. There's something going on that's really smacked one or two of the biotechs today. So this is just maybe a one-day phenomenon because the MACD and stochastic are still good. Have a little patience. Let's leave it for today. I would not say today. Let's look at it. Maybe I'll do it in my newsletter. I'm probably going to step aside right now. But give it a day or two. Today's Tuesday. Maybe by Thursday we'll have a much better feel. If there is a little bit of a bounce that starts to fail into the 325s, that could be the place to be putting on at least starting a short position. Let's go back to the SLX now. I want you to do the different sectors. I'm going to be talking about this a lot in my upcoming webinar. I'm going to call this a leg F just for now until it proves itself to say it's recycled to the upside. I'm not sure about that. And that makes the next 2 days really important all round. So the question I got from Sean. Yeah, from Sean is AKS and X. These are stocks that we often try to get in my newsletter. I didn't do anything today because I was a little nervous about AKS. His earnings came out this morning. X, I think, after the bell. And I'm looking at the chart formations and I'm saying, it's more emotional whenever Trump says something about imports, exports, some kind of constraints. That's when you see and steels in particular, you see them bounce, but they don't hold the bounce. And that's why I stepped aside. So I'm looking at this and I'm saying, you've got a little bit, would you add I'm just going to have to step aside in AKS. US Steel is acting well, but it's in leg D, a very quick ABCD in the weekly chart, peaks. Wow, this is tough. I missed it the other day. We did try, and I just missed it, and I left it alone. Is this E? G/E? I think X is the one that's doing better. This is what I'm going to say. You already have a position. More as an experiment than anything else. If US Steel fills the gap at 24.77 right now, if you can pick it up at the low of the bar today, which is 24.18, to inside the gap, somewhere between 24.14 and 24, just add another small position, and that one I would not even give it more than 1%. Make it a 30-cent stop. I'll tell you why. Because the MACD and stochastic are good in the daily. The weekly charts are improving, but they haven't shown the strength of price. And the MACD is just now crossing positive. So if you can pick it up, you'll have another position with a tightish stop. If it's going to work, the moment United States Steel trading at 24.82 up 104, the moment it can get to 25.18. The 25.58 200-period exponential moving average becomes a magnet. Why do I say that? Because when it broke down on the gap down after the 25th of April, where it was at 32, next day it's down at 22. This is just a beautiful filling in of the gap down, but not the gap itself. That gap might be tough, and that's why I'm saying you could try for the gap, try for the 200-period moving average within the gap. That's really going to be the test. If it fails to do that, I don't want any part of US Steel at this particular point. Next question, Paul asked about FAS. So I'm going to go to the XLF. Now, this is a little surprise to me. We've been working, I've had a buy-in for the XLF a little bit lower than the low that was made right there, 24.59. Missed it. I thought there'd be one more chance. Instead, it gaps up today because the Fed might be raising rates, and that's what the banks seem to like. This is now leg C in the weekly chart, leg E in the monthly chart. I'm going to suggest to you that FAS is not FAZ. FAS is the positive. This is a 3 times bull XLF. I have some, let's see. So the actual question is, take a look at FAS. What is your wave count? I'm in at 50.50 and it's trading at 52.99. Hey, first of all, Paul, bravo. That's really important. A lot of people have asked me. You've got a bunch of emails about Goldman Sachs and all that. I'll be back. Basil Chapman. Dow's up 115. S&P's up 950. I'll be back. We're waiting for leg D in the Dow.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So remember we were looking at that diamond formation right there? So we've gone to the upside. And that's really the point that I wanted to make about patterns that you have to look at the history of the patterns and you really have to understand them. So this is the one I pointed it out in my 120-minute chart, whatever it was, a few days back. And then I said, the funny thing is it's probably not going to break down, but break up. And it did. And it's the same thing here. It didn't break down, break up. But that's the diamond formation. So, okay. Now, a statement then Tucker says, make Congress be on the same plan as the citizens and we may see some action on getting something done. Tucker, you might recall that was my big theme way back with in the Obamacare days. I said it's so simple. Just say to the to everyone in government, you have the same plan as the people, or the people has the same plan as you. But it can't be two separate plans, and that's it. Case closed. And then you would have seen something done that would have been the best of both worlds. It'll never happen. All right. So XLV, big plunge. This is the U-shaped pattern that has a right shoulder failure. The stochastic actually is good at 90%, but the MACD wasn't confirming the rally. This is going to be very important because it's leg E in the weekly chart, is leg D in the monthly chart. S&P Healthcare Spider Fund, XLV trading down 63 cents at 80.32, makes this double top failure pattern. Remember, it's like the lowercase h successful test. So this is an unsuccessful test. So we're watching this closely. Paul had initially sent to me an email saying, what's with the Dow rallying sharply, or the market rallying sharply, yet the composite index is down? Well, that's because of Google. Look, Goog, I still call it Goog. Goog is down 28 points after leg B. If it didn't make that new, this is that cup formation that we were looking at in the XLV, except this one didn't even get to the 988.26 level to go 1 penny above the high that was made in the week of 9th of June. Instead, it failed at 986.20. So 986.20, 988.25. 2 points lower, and now it's pulling back. And look at the MACD and stochastic already poor. So Google could have a little problem here. Going to watch this one carefully. And then Paul came in and said, the TLT and copper is signaling a rise in interest rates, which will take this market down. There are as many holes in this market as with the Red Sox team. When a shirt has so many holes, it eventually falls apart. No question about that. And that's the reason why I brought up the whole GE, my Dow Quartet, GE, IBM, MMM, and UTX. But if you said to me, they are gapping huge to the downside today, where do you think the market is? I'd say a minimum of minus 98, probably about 125 down. No, we're 118 up. And that's the rotation. That's what I'm going to be talking about in my webinar series, my two-part webinar series coming up Wednesday a week, and then 2 weeks from then. And the beautiful thing about it is that we'll be looking at stocks, we'll be following the stocks with chart formations that we choose or looking at or that we want to get or maybe short because it's sector buys and sector sells. And every day for the 2 weeks, we'll be going through the charts and discussing them. So it's an educational 2 weeks. And you can ask me any questions, I'll answer the questions. And then at the end of 2 weeks, we'll spend time just on the patterns. We'll look at the charts, and then what patterns can you expect coming up so you in your own work can start to formulate and make a template of the patterns and see how they work out. So that's going to be very exciting. Check it out, please. I think you're going to be well benefited by it. Next question was, GT, nice, good question here. You're still looking to pull back into August options expiration. Into August options, yes. By then, I think we should have some kind of a pullback. But remember, did I look at Mike wants to know, did I look at the VIX index? I did discuss the VIX index. I didn't actually look at it. I spoke about it. I said the VIX is at its lowest level that I've ever had in my chart formation. I would have to go back to the VXO as well. The VX for the Dow is a different one. So the lowest I've got 939 back in 2006. And then if you squeeze this close right there, you get another one at 931 back in 1993. And I only go back in this series back to 1990. But if I go to let me see if that was a VXO. What is the Dow? VX. Oh, no. I'll try to find it. I've got them all notated somewhere. VXC. Oh, man, I'll have to find it. VXX. Interested in my thoughts on the VXX. You know, I believe that we're getting closer and closer to having a really good trade in the VIX index. The VXX is trading at 10.98. I made a joke for my subscribers with the UVXY, which we follow and we participate in once in a while. ProShares Ultra VIX short. It was at 33 or 34 the other day, and I said, oh, we should probably short this and then wait for next week to maybe buy. Well, at 33 or 34, it's down at 28.51. What a beautiful short. But I think it's getting really close to at least a pop-up. So nothing yet, but I'm watching it real closely for subscribers. Yes, so I don't want to get distracted. Yeah, I was going to say, so SPY, you're still looking for a pullback into August. I'm looking for a pullback, and that would be to include the VIX index. I don't want to actually change my mindset right now, which says wait until the Dow goes to its leg D. I don't know if it will, but that's my thinking. It should. And that would be above 21,681, and then assess where we are before you pull any triggers at all to the short side. I'm making it as simple as possible. Maybe this time the Dow doesn't do that. The diamonds, the DIA, got a little closer, but also have not made it. So let's just wait. Let's have patience. So then I had a question about CVX TSO. CVX. Now this CVX is Chevron. Let me get there. Chevron, nice bounce today. Remember, this is the one that I said maybe for a dividend, but to tell you the truth, I was thinking more that the Verizon and telephone would be a little bit better, although Chevron and ExxonMobil are in an area where there's a lot of intense competition in the oil sector. But so is Verizon and now I'm looking at dividends. I'm looking at it in a way that we've been looking at it for a long time, and we're waiting to buy a particular dividend area. And that's the way I think I'm going to do it. I have to just say that CVX is just too bumpy. I don't want to be in. I don't want to be out, in, out, in, out. At this particular point, the question is it making rising highs and rising lows short term? Yes. On the weekly, no. So daily, yes. Weekly, no. So if Chevron can hold in the entire week going into next Tuesday, one whole week's worth of trading, if it can hold and not go any time, even touch 103.50. It's at 104.98 right now. Over the next 4 or 5 trading days, I'd be very impressed. But I think we've got to see this upside move continue. That's why I'll be along the Dow, and I'm anticipating the Dow will go to 21,641. Whoops! But almost, yeah. I think it's going to go to 21,682 or higher in the next day or two. Then we have to make decisions. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So looking at the cup formation, it was both a rectangle, an H that goes to lowercase m, and then a cup formation in the 120-minute ESU 17. That's the S&P September mini futures. Gone to a higher high. This continues leg C. It means you have a whole 120-minute chart, a bar, to go before it can make a peak. So I'm still expecting a leg D, and in the 120-minute chart. I'm not calling this an alternate count. Everything about it says nope. Brand new buy mode going to a leg C, should go to a D. Now let's get out of that, and I wanted to show you something very important. Oh, whoops, don't cancel that. Oh, wow. That would be a problem if I put an X there by mistake. Okay, so there was one question that was missing. Where the heck? What was the question? Where did it go? Oh, the question in terms of timing. When would I expect some kind of a sharper pullback? Well, I'm looking at this and I'm saying the MACD and the daily chart of the ESU. Let's just go to let's go to the S&P. Yeah, everybody looks at the S&P. Maybe not everybody looks at the futures. Not everybody looks at the Dow. This is very important to me. We've extended in the weekly chart to a leg D. Leg D is where you've got to start being a little cautious. The MACD is just slightly positive, and the rule of thumb is that it maintains the last signal, and the last signal was an up arrow, so it's maintaining that. But it also says when it's flat like this, that the upside is limited, that yes, it could move higher, but it's not the start of a major move to the upside. It's more the combination of a move. The stochastic at 90% says, hey, excellent right now. The relative strength, although it's under 80%, is still quite good. On-balance volume is saying, you know what? We're in an area in on-balance volume. That's the little blue line. This is the weekly chart is the middle chart right here. On the left is the is the daily, and on the right is the monthly. Let me open this up a little bit more. Monthly is in leg D. So D daily, D weekly, D monthly. And what it says is that when we are in this situation, you've got to be looking at the technicals. You don't want to over-anticipate just because you're in a D to say, trouble, because in the Chapman wave methodology, the objective is to get you to a D. The objective is to get to a D. Chapman wave buy mode is when you look for identify the lowest, most obvious low bar. There are other ways of doing it, but that's the easiest way to think of it. Merely count each successively higher peak alphabetically in sequence, A, B, C, D, uppercase on the way up, lowercase on the way down. It can go to E, F, and G, 8 peaks. But when you get to, 7 peaks. When you get to D, other things can happen. And that's really the rule of thumb. So this says to me, leg D, sharp move up, almost a vertical move up in the S&P from the low that was made at about 2402. We're at 2480, huge move, 78 points, beautiful, beautiful move. MACD is very strong, stochastic, steady like a rock at 93%. On balance volume saying, hey, I can't take this. A, B, C, D, E. I made a peak E, and I'm pulling back sharply. So I've got to look at this and say, what are the criteria that are going to make me cautious? So I'll be making a list of those things, and I'll say, all right, what fits? What comes right into this category? Is it possible to make a peak D in the S&P as a serious top, leg E in the IWM, and make a serious top? All of these without the Dow going to a peak D? Yeah, it happens really. It's just so it would be a peak C1, C2 double top. I think we're still going to go to that leg D. Then we're going to have to make some decisions. And that at 21,682 becomes leg D in the weekly chart. We've got all the little ducks lined up. What do we do? And we've got a webinar coming up in a week. We're going to make some decisions. Basil Chapman, I'll be back tomorrow. Have a great day. Check out my opening call. Stay tuned for some great...
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.